Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those confusing corporate filings. Today we're diving into Zoetis' latest quarterly report. It's an animal health company, so we're not talking about your doctor, we're talking about your dog, your cat, maybe your cow if you're in that business, so this report may not be very exciting, or is it? Prepare for some twists and turns. Are their profits up? Is their debt a problem? Zoetis, a major player in the world of animal health, just released their Form 10Q for the period ending March 31st, 2025. So let's decode it. We're going to break down what's happening with their money, if they're making any big changes and what risks they see on the horizon. If you've ever wondered about the financial health of a company that keeps our furry friends and farm animals healthy, you're in the right place. Also, if you're new here and find this content valuable, be sure to hit that subscribe button and join our Discord community. Link in the description below. Alright, let's get started. This report covers the first 3 months of 2025, so we're looking at January, February, and March. It's important to remember this is an unaudited report, meaning it hasn't been fully checked by outside accountants yet. We'll be focusing on the key financial numbers. First off, revenue. Zoetis brought in $2 billion in revenue, a slight increase from the $2.19 billion the same period last year, so they're doing pretty well on the revenue side. Now, what's more important, did they make a profit? Absolutely they did, to the tune of $631 million. That's up from $599 million from those sales. To put that profit into perspective for shareholders, earnings per share came in at 141 cents, up from 120.31 last year. This is a good sign for investors since it means each share is earning more money. Let's look at what Zoetis spent to make all that revenue. We will look at cost of sales. This is where it gets interesting. These costs were $622 million, but this is down from $643 million. That is a significant improvement because it means they are becoming more efficient. What about all the other business-related expenses? These include the admin expenses or the cost to sell the products. These selling, general and administrative expenses, or SG&A, were at $563 million. This number is up from $547 million, so their business might be becoming more expensive to run in these categories. And finally, they spent $157 million on research and development. That's slightly down from the $162 million they spent last year. This is really important for Zoetis because that is what helps them create more drugs, vaccines, and other products. You definitely don't want that going down too much. Let's check if Zoetis has enough money in the bank. How much cash and equivalents did they report? They have 1 times 70, $21 billion, which is actually a bit lower than the nearly $2 billion they had at the end of last year. So they are spending down cash. Let's take a look into where that cash is going. One use of the company's cash. Zoetis has been buying back its own stock. They use cash to repurchase shares. This is good for the stock price as well. The amount of treasury stock increased, meaning they bought back more shares. How did all of that impact their cash flow? From operations, they generated $587 million, nearly identical to last year's $595 million. That's pretty impressive. Now, when it comes to investing activities, which includes things like buying equipment, they used $175 million. This is more than the $131 million they spent last year. Their financing activities, which is how they get funds, mostly involve spending $677 million, largely on buying back stock and paying dividends. Where is all of their business coming from? Here's the breakdown of their revenue by geographic area. Digging through that table, the United States is Zoetis' biggest market, bringing in $1.138 million, or $1,100, and China $3 dollars and dollars not of $101 million to $88 million South America and China. Let's see the major animals and what they brought in terms of revenue. Their companion animal business, which is dogs, cats, and horses, brought in a lot more at $124.6 billion compared to livestock at $645 million. It seems to be a great business that is worth much more than the livestock part of the business. Lastly, in terms of main product categories, we have parasiticides at the top with $562 million, with vaccines coming in second at $447 million. It's good to know where their income is coming from. So what big moves did they make with their business? There isn't much going on here, although they sold off a part of their business involved with medicated feed additive products in October. This might have a small impact to their revenue moving forward. Let's talk about debt. They have a multi-year credit agreement, which means they can borrow up to $1 billion and potentially even $1.5 billion until 2027 if they need it. However, they didn't actually borrow any money from it this quarter. This is good because it is a sign of financial stability. What about loans that they already have? Well, they have $5.227 billion in long-term debt. It's basically unchanged from the end of last year. They are not increasing their debt, so that is a good sign. What is this item? It comes from a mix of some small activities, including some currency exposure risks and interest income. For this quarter, it amounted to a cost of $18 million. Alright, taxes are important and they need to be paid. The company's effective tax rate was 22.1%. This is up from 19.8% last year. So it ended up paying a little bit more in taxes. Time to talk about lawsuits. Zoetis is currently dealing with an environmental claim in Julianopolis, Brazil from over a decade ago. The municipality claims waste from a facility wasn't properly destroyed and caused pollution. Zoetis is one of 6 companies involved, and while the situation is ongoing, it's hard to predict the outcome. What are the most important risks that Zoetis themselves sees? Zoetis says that trade policies set by governments can impact their supply chain and create uncertainty. It might become more difficult to attract non-US customers, suppliers, and partners. They see that recent announcements of increased tariffs can greatly affect them, and trade-related events may negatively impact them. They also state being in an international environment brings significant amount of international risks. A big one is also they need to comply to regulations in multiple areas, countries, and jurisdictions. It seems being an international environment brings significant amount of international risks. A big one is also they need to comply to regulations in multiple areas, countries, and jurisdictions. It seems being an international company is tough. Finally, they seem to be committed to buying back their shares. In fact, they have bought over $400 million of their own shares. This can indicate they see the stock as cheap and expect future growth. Now, let's take a step back and analyze these results more broadly. Zoetis seems to be in a pretty solid position. They are making more money than ever, and even though expenses are up, they're managing to keep things relatively stable. As they mentioned in the report, it is good that the companion animals business is performing so well. Plus, their stock buyback program indicates they're confident in their future. They appear to have great financial strength. But it's not all sunshine and rainbows. They do have meaningful amounts of debt, but it doesn't seem too serious to impact operations, at least for now. And they mentioned seeing lots of challenges being an international business. Alright, that's our breakdown of Zoetis' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.